Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is the Russell 2000 Index, ticker symbol RUT. And this Russell 2000 Index is made up by mainly small cap stocks. So we're starting with this one because it tends to follow the signals fairly well. And so last week I said that we would most likely pull back from resistance. And we actually did that on Monday, and we almost hit the target right here. You see this end of the line is my target. So Monday and Tuesday, Wednesday, Thursday, Friday, we closed with a green candle today. And we have mixed signals because if you look down at the bottom of the chart, I'll erase this for you. I'll draw new lines. If you look at the bottom of the chart, well, this is a resistance point. You can see that the stochastics is still moving up now, and it's pivoted higher, while the CCI is also moving up. So if we're using that as an indication of weighing the evidence more or less, the buyers are stacking up more than the sellers, and when we're right at a resistance point like that, there's a good chance that we'll break out over that resistance point and move higher just like that. So that's the forecast for Russell 2000. If we look at the spiders, ticker symbol SPY, you'll see again I left my lines on the chart, and on Tuesday we pulled back, almost hit my target. We gapped down on Tuesday and then filled the gap on Thursday. So we can't say that that hit the target, but it came close enough because you can see that the 20 period moving average here, that blue line, is most likely going to act as support. So I'm going to erase this line, and I'm going to keep my resistance line up here because I want to talk about that a little bit. Just like the Russell 2000, you see that the stochastics is heading higher, CCI is heading higher. And so I think that the SPY could break out into new highs next week. Now, if it does not move in line with our forecast, then you need to just set your stops correctly, protect against the downside risk, and make sure that you're following the charts, because the fundamentals right now mean very little, because even the analysts aren't going to be able to pinpoint the earnings expectations with great accuracy. And so I think we'll be able to follow the charts here. This is going to extend out to 298.67. That's my target, at which time there's another resistance up here that I think will hit. So again, short-term expectations will break out over this resistance, possibly fill this gap fill point right here. I even put that as like a midpoint to our goal or resistance target there, and we'll see what happens from there. So that's the spiders. If we look at the VIX, very interesting because the VIX is inversely related to the S&P. On Tuesday, we came very close to hitting my target here. But look at this. Look at that bearish engulfing pattern as the stochastics is still crossing lower and the CCI crossed back down. Now, the CCI is in oversold condition, so you have to be very watchful of that, because if the CCI starts turning back up and the VIX starts turning back up, even after this bearish engulfing pattern, then we have to watch out on the downside for the SPY. So keep an eye on that. The Volatility Index is a leading indicator that I keep on my watch list. And so I think the VIX next week is going to move lower just like that, possibly test this support level, and we'll have to see how that plays out. Now, let's look at the diamonds. This is a Dow Jones Industrial Average ETF, ticker symbol DIA. And you can see that we gapped down on Tuesday, pretty much followed suit. This was a 2-week forecast, so while we came halfway down to hit that target, we bounced. And now this gap fill point is most likely going to act as resistance. But like the other markets, we're seeing that there could be a rally to the upside. So I'm going to go along with the fact that the technicals are showing more or less neutral right now. And so what we're going to do is just play it safe. We're going to say that the diamonds are going to break out over that high, because on the way down here, the volume is dropping. You see that? That's a sign of strength, because the sellers are lightening up on their selling pressures, so the buyers might start to move in. So I think we're going to break out of that resistance point right there. And then that resistance will go through a role reversal to inform a resistance, once broken, turns to support right here. And that is something that you see on most charts. So keep your eye on that. Set your stops below support, below the moving averages, and make sure you're trading against the technical signals and not with your emotions, because this market is still fairly volatile. Now, finally, we wanted to look at the Qs, ticker symbol QQQ, which basically represents the tech sector. And as you could see last week, I said we would go up to test resistance and pull back. We came very close to hitting that target on Tuesday. Didn't come all the way, but just like the rest of the markets, we bounced. And so I believe that this is going to move in what I would call the domino effect, where if the diamonds and the Russell 2000 and the spiders are looking more bullish, the Qs are most likely going to go up as well. There's one slight exception that makes this a little bit different, in that we have a good, strong green candle right here, but that's on lower volume. Normally, I would like to see higher volume as the stock is getting ready to break out. And I think that we will break out of the highs from back here on the 17th. But I don't think we're going to go all the way up to fill that gap that we had back here on the 24th of February. However, that will be a target eventually. We have to first get through this resistance first and see what happens. If the volume starts picking up as we break out over that resistance, then most likely the buyers are going to start to move in. All right, that's it for the weekly market report. Have a great weekend, and we will speak with you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.